Hey traders, John Howell here. Today I want to share something with you. I've always had a 3,000 target on the gold market, and I have done now for a couple of years, and I see an ultimate price target of 3,000 on gold. So I want to share with you I want to share with you, why, or the pattern that has repeated through the last 100 years, and why I see so much more upside to come. And then secondly, I'm going to give you the projection of the pattern of how I actually arrive at that 3,000 target on gold. So let's get straight into it. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into it. So what I want to do is I firstly want to share with you why I've always had a very, on an investing point of view, meaning a buy and hold, I've always had a very long-term view of bullishness and why I believe we're going to make really significant moves. And that all comes back down to the really big long-term picture. So what we're looking at right now, we're looking at the gold chart. And let me just take everything off the screen here for a minute. Let me take off that screen. And what I want to do is I want to go down to the monthly charts, because this is where it's going to be, this is really zooming out to the big picture now, okay? And there is a pattern that has formed all throughout history, and it's actually happened twice in history, maybe even, actually, you know what, possibly even close to 3 times in the past since literally 100 years. And what's happened here? So again, I'll talk about the first thing, which is why I've always seen so much more upside coming, and then secondly, I want to give you that target there. So let's talk about the first one here. So what I've noticed with gold is we're looking at the monthly chart, okay? So this takes time. This is going to take several years, probably several years or more, to play out to get to my ultimate target. But what I've noticed with gold is that if we run up and hit a resistance point, generally what happens, it'll come back down for many years, and it'll come back up, it'll hit that resistance point, break through this area here of resistance, generally speaking around that, and then it'll come back down to it, maybe even flush down a little bit more, and then it'll come back up, and then we see a very big long move up. And this happens, again, this can happen over the period of a couple of years, or this happens over the period of, say, 10 years, right? It's a big long-term view. Well, again, we're looking at the monthly chart here for your reference there. So let's go back here. So this has actually happened a few times here. Let me just circle them. So it happened once down the bottom here. Okay, so we see down the bottom here when gold was at, like, what's that, zero? Maybe $100, and then it ran to 200, 300. And then it happened here as well too, right? And again, I'm going to get to these minutes. So that 1, 2, 3 times this has happened in the past, and it's actually happening again right now as I speak. Every time in the past we've made this pattern, we've made extraordinary quality moves in the markets. Extraordinary quality moves in the markets. So let me just walk you through this here. Let me actually go back to the very first time back here, okay? So once again, this is the gold monthly chart. And in fact, that actually wasn't the case back down here. Back in 1971. Look at that there. Back in 1971, we actually broke up, and then we continued to make big moves to the upside. So the very first time, actually, let's go to the weekly chart here, because the very first time that it actually formed was, there we go there, okay? So is here. So you'll notice, there we go, right? You'll notice this pattern through here. So let's actually bring this up. So you'll see here, see how we actually have this ultimate resistance, and then we pull back. This happened over the course of a couple of year period. So what ended up happening was this. What did we get? Let's actually do this here. We got what? We got that major high point. And then what did we get? We got, see how it actually ran up, pulled back, created that higher low. And then guess what? What happened afterwards? Then we got the big explosion move, right? That's how, made an ultimate high, pulled back for a while, ran up, and then come back down. That was that very first point through there. The next time it actually formed was, now you can see, remember, this is the ultimate high point up here. So if we make this ultimate high point up there, like so. Okay, let's actually just, and then Actually, I think this is on a monthly charts here. There we go through there. Okay, so it wasn't the exact. Let me actually take that off the screen there for a minute. All right, so it wasn't exact there. But let's go to the monthly charts now, just see if I can get a bit more clearer picture there. Right, yeah, you can see here, right? So that was the high point there, but the major levels of resistance was around there, or maybe even up there. But look what happened here, right? Same sort of thing. That's the same sort of scenario. Once again, major resistance came down. Look at it, came back up, then came back down, created the high low. Now we're looking at the monthly charts, right? That's number one. Look at this here, number two, right? The exact same thing. Broke up, bounced off it, higher low, big move. Major high point, come back down, ran up, pull back, it bounced off it, big move, right? So it's when we actually spend, and especially on this monthly chart, right? It's when we spend a lot of time getting above these highs, and now we actually found support, and now we're actually rallying up. So that was that one point there. That was sort of like on the weekly charts there. The big monthly chart made the ultimate high back in 1980. We didn't get back to that ultimate high point to about 2008, but then when we actually broke and we had a little pullback, then we had a big move up in gold. But look what's happening now. If we go back to the monthly charts, the same situation. This is why I've always had a very, very, very big long-term move, right? Very big long-term view on gold. Because you can see here, ran up, major resistance around, call it around that 2000 level. But look what's happening right now. Look at this here. What's this doing right now? It's creating what? It's creating that higher low period where the market breaks above new highs. This was the high point. Look at it here. Broke above new highs, came back down. And now what's it doing now? It's now doing what? It's now creating this higher low. The only really thing that we want to keep an eye out for, or the big thing we want to keep an eye out for, is that when it actually starts to break past these previous highs. Because as you can see, it has a lot of rejection, but then when it starts to break, you can see we actually have down months too, right? Remember, this is a monthly chart. This is actually a down month through here, a down month. So we do get down months, but overall, we can see big moves to come. Major resistance point, come back up, pull back. Now we've actually had a bit of a rejection point, but what do we see once again? We see this. Remember, that's that high point up there. So that's where I say, or especially on a monthly basis, like this month, if this month we can get a close above this high point through here, that'd be very, very, very bullish for gold. Very bullish for gold. But in any event, this is why I personally have always been bullish gold. And a lot of people are going to make rational reasons why gold is going to do something. And I just look at statistical data and see what the patterns tell me. So again, break new high, come back down, test it, high, low, big move. We break it, we break this new high, pull back, tested it, and big move. Came back down, broke new high, come back down, tested it. Now we're starting that up move. So once we start to get past that, say 2000, and remember this on the monthly chart. Let's go to the weekly chart again now, and we see how we're getting this rejection now. If we could start to get, remember this, that's that major high low on that monthly chart there. If we can start to get something like this, where the market holds here for a bit, and then we start to rally up like this, and we start to break above, then guess what? Guess what the next leg is? The next leg is what? Remember this here, right? Something very, very, actually look at this back here, right? This is actually very, very, very similar back what actually happened here. Because remember, this point back here was what? This point back here was that major high point, right? It was that major high point, and then look what happened. And it actually spent probably 12 months, very, very similar to what it's actually doing now. It broke to a new high, spent one to 2 years. Yeah, 1 to 2 years just going sideways. It actually rejected it once, rejected it twice, but when it broke through, look at that big move. Now remember I said big move? Look, stair stepping, right? This is actually a weekly chart. 1, 2, 3, 4, 5. We actually had a month with a pullback and then a run. A month with a pullback and then a run. Month with a pullback and then a run. Okay, so when I say a big move to come, you're going to get those stair steps. So what we're getting right now is something very, very similar to this. Here, broke to a new high, pullback. Now we're getting a lot of sort of sideways. So if we can start to get, once again, if we can start to get that like this, and then a break up like that, that's going to give us a nice little break above. And then once we get that, then I see the 3,000 target coming. And I'll share with you exactly how I got that 3,000 target right now. So that's the very first thing is, on a statistical basis, what I'm seeing on the big picture, the market's actually telling us that we have a massive probability that this is actually starting already, right? We could run up and hit the resistance again, maybe hit the resistance again, and then maybe break out, right? But that's what I believe is starting right now. So let's actually go to how I get that 3,000 target there, okay? So if we have a look at this here, let's actually bring this up to here for a minute through there. Let's actually bring that top up through there. So you've probably all seen the cup and handle pattern, okay? The cup and handle pattern is this. We've had a very big move up. Then we've had then we've had the cup. Now we're getting the handle through here. Guess what's happened? The handle's actually broken out. So expect a bit of this and then expect up. So what you do is when you actually see this pattern, you measure from the high down to the low of this pattern, and then that's where your target is. So if I do a little copy and paste, and I measure from the bottom of that cup, and I draw it to the upside, and I draw it from there to there, right? So that 1,000 from there to there. All right, and then I extend it to the upside. Guess where I get to? I get to where? Let's actually do this here. All right, so I get to, where's the target? The target is 2,800 is the target. But then what's probably likely going to happen is the market's going to overshoot like it does. And this is just probably me guessing as well too, is that the nice round number where the market loves the round numbers, because even look what's happening right now, right? If we squeeze it up, we can see that the 1,000 level, that 1,000 level, look that 1,000 area, 1,100 area, look at that area there, right? Major rejection there at 1,000. So 1,000, that 1,000 area was strong. Look at that, and look at that 2,000 area, 2 to 2,000. That area, what? Strong. So that tells me that this whole 1,000 to 2,000 area is a very big move. Once we actually start to break above here, guess where we're going to? We're going to now the next 1,000 target, which is then the 3,000 in the markets through there. So that's the reason why, guys, they're the two patterns of why. One, I see a lot more upside to come with gold, but we just need to be patient. And secondly, the pattern that I used to give me the projection overall, but also just looking at where the major levels of support and resistance are, and then projecting up like I did there to find those levels of targets there through. So there we go, traders. So traders, this is what I want you to do right now. I want you to go to Johns, JOHNS, johnsfreetraining.com, johnsfreetraining.com. Go over there right now, register for my webinar. On that webinar, I'm going to teach you exactly the things that I had to learn to actually go from losing money to actually making money. I'm going to teach you then all my steps to my trading system. And then I'm going to show you exactly how I scan the market, all the gold and silver markets as well too, gold and silver stocks, all the different individual stocks, et cetera, of how I scan the market to find amazingly high successful trading patterns. They give you a massive win-loss ratio. We're talking like 90% plus. And I'm going to share all that with you on that webinar. So go to johnsfreetraining.com, or there should be a link in the description, and I'll see you in the next video.